This week's commentary is entitled Apophenia, Armageddon, and Armageddon. Point is, we're going to look at all those patterns people think they see and deduce what actually might lie ahead. So here we are, another vantage point in the office. We're in my office. Thanks to all of you who've come down to visit us, who just couldn't wait for the video tour, but we promise that's on the way too. This week though, we're talking about Apophenia, Armageddon, and Armageddon. So for those of you who may not recall, Apophenia are people who are finding patterns where they probably don't exist. We all know Armageddon. Armageddon is a hilarious take on all the false prognostications of doom from Keith McCullough, an analyst that I like. I'm stealing it, certainly crediting him. That's what we're going to talk about this week, is really how bearish and bullish and manic so many investors are these days and why there's some reason for hope. So let's first start with where people are. This first chart shows you the Yale Crash Confidence Index. The lower the lines, the more people are looking for a crash. As you can see where we're at right now, almost as bad as we've been since the Great Recession, with maybe one other time in that 2011 scare that people had in the markets. But people are, at least a big segment of people, are very bearish. In our experience, and understandably, a lot of boomers on the precipice of retirement, so worried that their timing might be off. Again, a huge part of things that we get to help people with. On the flip side, a lot of these boomers kids are incredibly bullish. So these are the people buying all the stocks whose tickers look like a recommended password from your computer. Off the charts. Although their hands got a little shook this week with the broader market just down 3%. Some of those tech names got really smashed. ARK ETFs, which are in a lot of disruptors, saw massive outflows. So the big, bold GameStop, where, hey, we're all in this together crowd, got a little shook this week, had some outflows. We'll have to see if they're back. But at the end of the day, we, of course, as investors, want to stay more disciplined. We don't want to get too bearish. We don't want to get too bullish. We want to try to take as much of that emotion out of our process as we can. And to that end, we certainly don't want to be buying into, this is the last chart just for some comedic value, all the prognostications of doom. For one thing, what are you really going to do if it's truly Armageddon? But what it's been historically, if we look at this list again, I had to go to Wikipedia and check this out. Every single one of these is a different famous prediction of the end of time, that it's just an Armageddon, that it's a false claim, and you've reoriented your entire portfolio or maybe even your entire life to get ready for that. Is the China's going to take over the world, nothing but gold and Bitcoin. What are you going to do with that FDIC insurance? Are the Chinese going to honor it? What are you going to be buying with the gold and Bitcoin? Those things presumably have value. The point is, life finds a way through, and often in ways that, again, as we've seen with the vaccines this year, are in ways that are unexpected. Unexpected breakthroughs, positive things that we couldn't have predicted until they come into our lives. So what should you be afraid of? Well, a couple things. One is buying into past performance. Now, this can come in a couple ways. On the one hand, you have those uber bulls that are getting into highly speculative names with no earnings. Goldman Sachs actually made an index of this. It's up 250%. Companies with no earnings since November. Crazy. Seen it before. Doesn't end well. On the flip side, you have a lot of people who are sticking with antiquated approaches. Those classic 60-40 portfolios. That 40% in bonds right now is getting rocked as interest rates go up. We've been talking to you about it, warning you about it. Certainly you don't want to abandon all the different asset classes, but add a couple things beyond just your granddad's portfolio. The second big thing is that arrogance of thinking you see something people don't, that you can time the market, that you do know when Armageddon's going to happen. As opposed to approaching each day with some humility, certainly approaching investing with humility and understanding that that ability to predict, as that list showed, very, very difficult, if not impossible. Best Ryan and I can tell, no more than a few of those predictions of apocalyptic doom have come true. Lastly is, why should you be optimistic? What is the good news that's out there? Well, fortunately, there's a lot. perhaps most importantly, is the vaccine front. That's the critical linchpin to getting this economy restarted. You saw Britain come out this week and say, hey, by 6:30, we're open, period, end of discussion. That's important because they've been one of the most restrictive Western countries, and they're far behind where we're at in the US, where best estimates show by late March, early April, you could have up to 2/3 of the population have gotten at least one poke of the vaccine and or had it. That's getting really close to herd immunity, which suggests we'll be open even a little bit before them. That, with monetary policy, with the Fed, who Powell reiterated this week, is still committed to keeping interest rates as low as they possibly can, bodes very well for the economy over the next 6 to 12 months. Last, macroeconomic data this week, just a bunch of important big numbers. GDP was revised up to 4.1 for fourth quarter. Earnings came in with over 80% of companies this last earnings season's beating their estimates. Durable goods, the movement of all those things that we like to buy, again, up 6.3%, back to pre-COVID levels. Unbelievable run for them. And then personal income up 15.1% year over year. We live in a service-based, consumption-based economy. That type of number bodes very well for what lies ahead in terms of people's ability to get out, buy things, get the economy stimulated again. So hopefully that's calmed you down if you were in that super bearish camp, or pulled you in a little bit if you're in the bullish camp. But again, reasons certainly to be optimistic, not reasons to be undisciplined. And if you run into somebody who's afraid of an Armageddon this week, hopefully you have some good news to share with them. Thanks as always for joining.